My name is Duncan. I work for CBRE. We are one of the largest property companies globally, traded on the Fortune 500 stock exchange. And we have a data center team based out of London that's been tracking the European markets for the last 12 years. We are involved very much in the acquisition for corporate clients of data center, both in the co-location outsourcing markets and also self-build selecting sites. We have, as we say, the largest data center team of outsourced professionals in the world. There are 12 of us, which shows you, I think, what a niche market this is. I'm going to be touching on a couple of themes I just thought I'd sort of flag early doors is outsourcing. CBRE is known as a big property giant, sharks with suits, American brokers, Mr. 10%, etc., etc. But we're actually over 50% now outsourced professionals within the business. We have been monitoring these major markets, typically London, Paris, Frankfurt and Amsterdam for over 12 years. And the trends that we see in these major markets are then trickling down into the smaller and emerging markets. And these trends, I think you will see, will then have relevance to what's happening in the Nordics as well. One of the major concerns for demand, particularly from US corporate clients, is ease of doing business. The fact that I'm here giving this presentation in English to yourselves shows how well set up you are, and that is a theme that we will, I think, be picking up as we go through. Before starting off, I just want to talk a little bit about data centers. Data center is essentially a form of outsourcing and mitigating risk. Data centers are all about security, safety, protection of data. That is key, that is critical, that will not change. Starting then off, major markets, London, largest market in Europe, over 45% of the total European mature market stock is held in London. Main reason for this, large corporates concentration, biggest in Europe, most head offices, and they've embraced the outsourcing, particularly driven by the banks and the financial sector, based on the strong financial sector in London. Amsterdam, best connected major market in Europe, fastest growing supply or supplier of growth. One of the reasons is this is the hot market, or one of the hot markets in Europe at the moment, based predominantly on connectivity and international demand coming into the market. We'll touch on that in a bit more detail later on. Paris, subdued activity, retains significant demand potential. Reason activity is basically subdued is the connectivity, or the demand that's going into Europe is going in Amsterdam and Frankfurt on the connectivity working through to Eastern and Central Europe. Why does it contain significant potential? It contains significant potential because there are a large proportion of corporates who are located within Paris, second only to London, and as yet they typically haven't embraced outsourcing. So what they are typically doing is holding their data within their own confines, within their own offices, their own data centers, and they haven't invested into the co-location outsource market in the same way as London has. Finally, Frankfurt might be a bit surprising, largest internet exchange in the world in terms of data traffic. Highest co-location uptake so far in this year. One of the main reasons for that is there has been a couple of significant cloud deals closed recently. That has quite a bit to do with data sovereignty, and something we'll touch on a bit earlier. And data center demand, while sometimes it's flexible, we're starting to see it driven now by governments to be close to markets. Moving on, European demand trends. I want to touch on a couple of things here. London, first point, you'll see the size of it. It is by far the largest market, as we've already said. Currently below 10 megawatts of take-up. There are quite a lot of things happening in the market at the moment, and we expect to see that nudging up closer to 18 to 20 megawatts later in the year. Big points in relation to Amsterdam and Frankfurt, as we said, the hot markets. This is where we're seeing growth. This is where we're seeing acquisitions. Amsterdam is all to do with the connectivity and getting access to that international demand. One of the key factors is that the Americans have woken up to the fact that there is another country other than just the UK that speaks very good English, ease of business, mature setup, access to customers, access to connectivity, low latency. And we are still seeing strong demand, strong trends and strong growth from corporates in these core markets. That is mainly to do with people wanting access to corporates, data center end users, tech-savvy population. Touching then on business models, various types of co-location providers in the market. A quick glance over, you'll see the systems integrators at the far end down to wholesale co-location. Wholesale co-location model, typically freehold investor, REITs, and long-term cheap space, low offering of services on the service stack, if you like, deliver down to the PDUs and hand over, and then we move sort of up through to the likes of Telecity, Interaction, Equinix, the more retail, global, pan-European providers, through to the carriers, private cloud, and then the managed service. I think one of the key things I just want to draw everyone's attention to here is that was the typical model. We're now seeing a blurring of the lines where demand is changing, requirements are changing. Requirements are getting smaller. The 2 to 3 megawatts in co-location are becoming rarer. You're seeing companies looking more at 200 to 300 kilowatts with scalability, flexibility. Can I ramp up my power? Can I scale back my power? Can I ramp up my footprint? Can I scale back? Can I take more services? What are the remote hands? What's the connectivity? Do you offer bandwidth? Do you offer private cloud? Who else is in the building? What's the ecosystem? Who else can I connect to? All these kind of questions coming in and providing challenges for the more typical wholesale retail model. In addition to that, we've seen particularly in the pan-European markets, the major European markets, sorry, a increase in supply over the last 24 months, space coming to market. We have seen a increase in competition, a lot of it based around supporting share price. So we have seen significant pressure on pricing, and pricing has typically in these markets over the last 18 to 24 months reduced significantly, driven by that sort of perfect storm, if you are the end user, of increased competition and desire to ensure that you win the business. Global M&A activity, just picked out a couple of highlights here. I think the main trends here that I'd like to sort of talk to you about are the expansion into markets, Telecity picking those 3 ones out. That is how major operators will move into smaller regional markets by acquiring existing business, and then the likes of IBM and Schneider acquiring Software and AST Modular, which is all about adding additional service lines to your current business offering. Mature versus emerging markets with the Nordics as a sort of highlight. What we've already been talking about, Western Europe, mature markets, a large proportion of global or pan-European operators present, picked out some of the main contenders there. Wholesale, retail, managed services provisions, all sectors available within the market. A strong indication of a mature market is the presence of a wholesale co-location offering. Connectivity is key. These locations are the most connected, best connected of all markets in Europe. That is still driving a key factor for demand. Specification, we're now starting to see legacy data center stock in these areas, which is having to be refitted or closed down and moved elsewhere. That's something that you won't be seeing in the more emerging markets where our modern data center designs tend to be incorporated and proposed because we're starting later in the design cycle. I think the M&E design is key to a certain extent because it's almost not now a factor It is taken as a tick in the box. It must be there. And the quality of design and engineering available from various operators in the market is already there. For example, if you go out into London, you will find 7 to 8 operators who can easily deliver competent data center supply, if not more. If you come into most emerging markets, again, you will find 3 or 4 operators minimum who can deliver core key data center product. So it is now meaning that demand tends to become more focused on other issues, other things that matter: ease of business, comfort, the warm, fuzzy feeling that the client gets when they walk into the data center meeting and everything looks good and rosy. What other services do we supply in the stack? What else is available? Looking key locations in the Nordics, Stockholm and Helsinki. A lot of that's to do with the gateway to Russia, the connectivity that's been available, and the fact I think that the Swedish and Finnish markets have been a bit quicker in mobilizing and going out and chasing the various demand that's available there. And we're obviously going to talk about power and clean power, green power in a bit more detail later on, but that is again a key differentiator from the Nordics. However, we are seeing that being offered elsewhere. For example, Switzerland can provide a similar kind of offering, and we'll also be looking at some other types of differentiating for market sectors and asking, can you rely on a single differentiator? News headlines, just picked out some things that are going on in the market. Just wanted to talk about trends from a high level. We're seeing local investment from local players building not just into connectivity but data center networks as well. We're seeing expansion from pan-European and larger co-location providers. And then we're seeing government investment picking out the Baltic Sea cable and the tax incentives for data centers in Finland. Global IT growth, I'm not proposing to talk about this in a lot of detail, as people are far better qualified around here than me to do that. I think the key piece here is the penetration versus internet new users. As you'll see, the Nordics, if this table was presented on penetration, the Nordics would all be at the top, and but you see the population, you're lower down the stack. That basically indicates that the actual growth or potential growth is going to go into Eastern Europe, where there are less people connected. Again, global IT growth, Cisco, the interesting key points here are data center growth, cloud versus traditional. 2017, they're projecting to see more data centers actually supporting cloud services than the traditional racks and stacked. Again, all showing growth in data centers, so more requirement for data center space. Other one, peak period traffic, web browsing, file sharing, real-time entertainment. If we were talking about this 2 years ago, as I'm sure you're well aware, that would all be far, far lower on file sharing and streaming, real-time entertainment. These are massive growth boom sectors, and the data center industry will have to adapt to provide that for that. Types of demand. Just going to go through this in more detail further on. Major city demand. Again, low latency, operational ease. This is still a core factor for corporates. This is what people want to see. They want connectivity into these core markets because that is where their customers are located. There is, as you'll see, likes of Digital Realty, Equinix, those major players, large amounts of megawatts available and built out and delivered in these core markets. Just a quick point on populations. I know you probably picked up on it. Frankfurt and Paris, that's the key metropolitan hubs. If you're looking at those as the wider metropolitan area, you're looking about 5.5 million and about 12 million in Paris population. That's still people wanting to locate their data where their customers are, where the users are. Had to stick in a slide about the UK, I'm afraid. Location-specific demand. This is essentially a phrase that's coined server hugger mentality. I want my data close to me. Is there a good reason for this? No. but it makes me feel comfortable. It makes me feel protected. If something goes wrong, I can go down to the data center and hammer on the door and hope that everything goes right. A lot of these locations here, we've picked out financial sectors. These are not data center markets, these are locations. The data center market in the UK is London, with some smaller secondary tier market in Manchester. The reason these have been built out is very often close to corporate head office, as I was saying. And to give an idea anecdotally, we were asked to value by one of these banks one of the data centers built out in the regions. And the question was, can you actually do that? Because is it technically a data center? Does anybody else want to use that as a data center other than you? And the short answer probably is no. Finally, local demand. These are the emerging markets within Europe and tracking along with the operators who have a presence in there. As you will see, Digital Realty and Equinix are essentially based in Switzerland and Ireland, so they're pretty much within one market. Interaction and Telecity have the wider spread geographically across Europe, and Telehouse is an interesting one because about 3-4 years ago, they decided to pull out of the smaller markets that they were in and concentrate on London and Paris. I think that's an interesting trend because it shows where the key focus for these parties is, but also it shows where the opportunities are. And Telecity and Interaction have been keen to go and exploit that by growing into the various regions. Now, why these markets? What's driving them? We've got the Nordics, as we've talked about, and as the earlier presenter talked about, tech-savvy population. Tech has always been very strong here. We've got the power, which is what we'll come on to later. You're looking at places like Dusseldorf. Why is Dusseldorf picked out? Dusseldorf's halfway between Amsterdam and Frankfurt on the connection. Simple as that. Dublin, what's driving Dublin? Tax incentives, essentially, by the government to large US corporates. Istanbul, obviously, access potentially to a massive new market, very strong growth in the Turkish economy, potential access further down into the oil fields. Vienna, again, another market that's growing. Why? Access into Eastern Europe, access into Russia. We're actually seeing instances of Russian companies and Central European companies coming out to meet in Vienna rather than waiting for, if you like, the connectivity and the data center market to mature further going into Eastern Europe. Flexible demand. Traditionally, these are the sort of core decision-making criteria for the various corporates and what you will look at. Latency, connectivity, the server hugger that we referred to, low risk. Always, again, keep reiterating, data center, low risk. Power price, green energy, taxation, land cost, and build cost. Traditionally, the latter sector were all nice to haves, not worried about. The data was more important, low risk, close to me. Cloud, again, low risk, as with all data. But I can have more flexibility, I can go anywhere. What are my concerns then? Green energy, major consideration. Tax, again, financial incentives, loopholes, what can we do to keep our costs down? Land cost, not so much of an issue. It's all to do with the cost of build. Data center as an asset, roughly, rule of thumb, 20% of the actual cost of the asset is associated with the land and the building. 80% is in the M&E and the plant and everything else that's provided in the services. Quick slide just to talk about modular data centers. New product that's been coming to market. I say new product, it's been around for a long time. The market seems to have caught on to it a bit more recently. What are the options? It's flexible. It can be deployed anywhere. It's cost-wise, I don't see at the moment a massive difference between traditional build-out and the cost of delivering modular design. But it does allow, modular design shouldn't, we've got pictures of a couple of containers out there, but don't just think of modular design as containerized. There are other ways of doing it. You can build out pods or pod design within a building, so it can be on a more traditional type model. But the idea is that you're building out a sort of one-stop solution. Players in the market. Interesting one to pick out there is IO, who have a slightly different modular concept, and they talk about then the instant access to data. So they are selling a software package layered into the modular data center, which allows instant access to your data center performance wherever you are in the globe, the ability to transfer working across multiple sites. That's a product that they've been rolling out. Goldman Sachs were their main core backer and core buyer into that design. It will be interesting to see how that plays out. I think the main point to take away from this is that this offers complete flexibility. You can have these deployed within your own building, within your own compound on site. They are completely clean in the sense that they need no other connection or reliance into other services. You just need access to the incoming power source. You can then build up, manage them how you wish. You can manage yourself, or you can get third parties in to do them. Spotlight on energy efficiency. One of the major changes we at CBRE have seen from our customers over the last 3 years is any RFI that goes out into the market, this is a core focus. Asking data center operators, what are you doing about energy? What are you doing about PUE? Where are you getting your energy from? Focus is on cost. Cost is key. Cost is important. I don't think it is as crucial as green power for the cloud providers. And finally, PUE. PUE has changed dramatically. Pressure from the Nordics, pressure in Amsterdam, funnily enough, where the local municipality started stating that all data centers had to be designed to 1.3 PUE, has driven this very quickly into the core mature markets. It's a bit of a misnomer, as we all know, because design PUE and actual PUE are usually very few and far between. And in a co-location data center, how can you manage your actual PUE if your clients aren't necessarily drawing all their allocated power supply? That's one of the challenges, and I think people get a bit too focused on that. Renewable power sources, we're all well aware of what those are. Corporate social responsibility, it's all key, as we've been saying, to these clients, and a point of competitive advantage and differentiation. And then this is pressure from customers through people like Greenpeace, Dirty Power, etc. Now, cloud requirements, private cloud, Rackspace, Savvis, Terramark, latency, close to customers, low risk. Usually around SLAs, they're tied in, they have to support their customers. We've seen a massive rise recently, public cloud providers playing into those systems. They are almost two types of public cloud now, whether it's connected cloud and storage cloud. Storage cloud can be located anywhere, but I'm challenging the two crosses on latency and proximity to customers as the public cloud players play into the private cloud sector and services. And we are seeing, for example, in more mature markets, all of these companies active, looking at potential access and connectivity, because that's where their customers are. And data sovereignty as well is factoring into that, saying that if you want to provide services, particularly places like Germany, Russia as well, then you have to be located in our region. Next, data center hub. These have already secured large corporate cloud providers, as I'm sure you're very well aware. Finland, Sweden, first out the traps in the Nordic region, very much based on the fantastic power you have and green power that's available here. Ireland, again, pretty much based on tax and government incentives. Finally, other areas to look at. I just want to draw Norway, I think, has the potential, obviously, to come up to be same with Finland and Sweden and win some of the business that's out there. Iceland is always going to struggle with the perceived risk. As we said at the beginning, data centers are all about mitigating and managing risk. Iceland has the threat of volcanoes and the disruption that ensures. And I think that is going to be a very key piece for any end user to get over. Just run through quick conclusions. The core mature markets, most connected in the world, likely to stay strong demand. We don't see demand ever moving away from these. these markets in the short to medium term. Nordics, very high internet penetration, very high tech savvy. Most growth will be in Central and Eastern Europe. Nordics, Helsinki's USP, sustainable green power. Is this enough in a more and more competitive marketplace to keep attracting core demand? Attracting major international demand, key factors to look at: market maturity, mine local demand. That's something that can be looked at. Outsourcing-wise, I would say Nordics are maybe 5 years behind the London companies at the moment. There is local business that is available out there. That is something that can be targeted. Government incentives, we've already touched on that, be there relief on power usage, investment into connectivity. Ease of business, absolutely key and crucial, particularly for the American market, and the American sector is driving international demand at the moment. Those are the companies that are out there, those are the people that are looking to do business in the sector. Finally, do you focus on cloud? How many big cloud providers are there out there? There's a handful. Is that a valid business strategy to go and chase what is a very, very small numerically, although highly lucrative, area of demand? Finally, data sovereignty will play an increasing role in location choice. This is another way of governments trying to drive the market, protect their own market. We will see this in the areas with the larger population, where you have the opportunity to provide service from a better location, but the governments will start to restrict it. We're seeing this in Germany, we're seeing this affecting demand. We're seeing major cloud players contracting and looking at this market and acquiring in that market when typically they probably wouldn't. I mean, the price comparison, for example, on cost of electricity, Germany versus Nordics isn't even in the same ballpark. Would these companies want to be located in the Nordics to serve Germany? Yes, they would. Finally, another point just to touch on briefly is chasing various sectors, market sectors. That, I think, is something that emerging markets can look at very strongly. We've talked about cloud, gaming sector very strong in Finland, gambling, Sweden. These are other ways where you can encourage and target international demand and flexible demand into your region and area. And, sorry, I hit the wrong button. Any questions? Thank you very much.
Hello.